Hi everyone, it's Grace. Welcome back to my channel. In the last special edition video, I provided you with a quick summary from last August to this August regarding the US government policies about the housing market. You know, whether those policies are staying or they're going away. Because my channel is a public forum, so it's visible to the public. And I get very valuable feedback from the government, whether, they like the policy or not. And I think that it's very important and useful for you as an investor to understand, whether the current condition favors my strategy or not. And you can also adjust in the future, right? So you can click here to check out that video. And in today's video, I'm going to give you an update for the July 2022 housing market in Florida. So you're going to see the housing price as of July and also the year-over-year change in housing price. So if you remember back in this March, and I actually did another one, basically that's the same type of data. And you can actually see a huge difference there. And remember, in March, the Fed just started raising 25 basis points. But right now, the Fed basically already raised 2.25% already, and that's a huge difference. All right, so before we begin today's video, remember to subscribe to my channel and click on the bell button so you'll get notified immediately when new videos like this are uploaded. Also, feel free to give this video a thumbs up if finding it useful. And another way to support my channel is by donating any amount that you feel comfortable with, either through PayPal, Cash App, Zelle, or QuickPay. And I'll provide the links in the link tree down below. All right, and thank you so much for your support, and I couldn't have done it without you. All right, so let's start it with today's video. So before we get into the data, I just want to update you on the news, especially for the risk, because we know that right now it's on a contractionary economic environment. So there's a lot of things happening, and there are a lot of very apparent risks that you just can't ignore. So I want to be very clear that there is a risk analysis component in today's video, and I want to address them first before we get into the data. So the first thing that people talked about a lot is that some mortgage brokers, not all of them, some of them just go like straight to bankruptcy because their only product is mortgage. So if the mortgage rate is going up, that means a lot of homeowners that rely on mortgages to purchase house, they're not able to do it anymore because their monthly payment is going to go up, and then it just goes out of their budget. So some of them just cancel a contract, or they want to wait for a little bit more to observe, what is the recession doing to the housing market in general, right? A lot of homeowners are being very, very cautious right now. So this mortgage broker called the First Guarantee Mortgage went straight to bankruptcy, and it laid off like 80% of its employees, and that's a huge deal. So right now it's in $473 million in debt. And this debt situation is not just in the US, but also for China Evergrande and also the other developers as well in China, as you can see. So if you're not familiar with the mortgage market, mortgage brokers actually not just issue mortgages to homeowners and collect the interest, right? Like when they issue that mortgage loan, they actually bundle it into another product and they sell it for a premium. However, because we're seeing that the current interest rate environment is tightening a lot, so that means these lenders can sell, but there are no buyers, because who would buy a product with no mortgage payment, right? This is not the type of situation that we saw in 2008, where there are a lot of buyers who do not qualify, right? This is the situation where like would-be buyers are backing out because of the huge risk that they're seeing beforehand. So I do think that we need to pay very special attention to these lenders or companies that are offering solely mortgage products, and there's a huge risk right there. And like I said before, currently the Fed is trying to do a recession stress test, and that will put a lot of companies to the test whether they can survive the recession or not. All right. So another piece of news that I saw is also a huge risk is that buyers are like canceling contract, especially for home builders, because they are the ones who build new homes. But you have to understand that these home builders, like some of them are not having an existing home yet, and they're selling it beforehand. And for home buyers or people who are ready to buy, that is also a risk factor. For example, if the home is decreasing in value, right? Or the home builders are, I wouldn't say that they're already having financial trouble, but if they're having liquidity trouble already, what if they file for bankruptcy, right? So if homeowners pay a deposit or already pay the 20% or some type of money down already, and should those homeowners go to bankruptcy, these homeowners are going to lose out on their deposit or however much money they put down already. And that's a huge risk factor there. So that's why some of them are backing out of the contracts. And this is also very location specific. So I would encourage you to explore a little bit more. And as usual, I will provide all the links to today's articles and news in the description down below. All right. So another thing that I'm seeing is that the price cuts are kicking in already. And I do find that some of the websites actually provided a little bit more data, and I after like researching for a little bit more, and I think that these are good references that can provide you with an overview of what's happening in the housing market, especially in the major metropolitan areas in the U.S. All right. So according to this article by Realtor.com, there are 10 cities that the sellers are cutting price very, very deep. And then there's also an increasing percentage of the sellers cutting prices. So in this map, you can clearly see that, some of these housing markets that are having very, very high percentage of price cuts, and you want to find out a little bit more. For example, we previously mentioned that Austin is one of the housing market that's very overvalued, and I also see that in this market the price is already crashing or correcting at the current moment. So this map actually matches. So this map actually matches one of the tableau maps that I did for the year-over-year change in the metro areas. All right, so I'm also going to provide a link to that map so you can explore a little bit more. So basically, all these areas are having a very apparent change in the inventory. So these areas, you're seeing the inventory is like going up, like really crazy, as soon as the mortgage rate is increasing. So you should pay very close attention to these areas, because it means that there are not enough buyers who are interested in these markets, and the price cuts are getting deeper, and more sellers are also having price cuts. All right. So for example, in Phoenix is also one of the very, it's getting more and more expensive. But we're also seeing that the inventory is also increasing quite a bit when the mortgage rate increases. All right. So definitely explore a little bit more. And also, if the prices are cutting in, then it means that the market is rebalancing itself. So right now, the buyers are having a little bit more power than sellers, right? You're seeing that sellers are offering concessions, or sellers may no longer able to sell a house as is. They may need to, fix something up before they can sell a house, So I definitely see a lot of market rebalance, especially in these markets, right? Right. So another thing, and this news is actually from the National Association of Home Builders. And I do think that it's important to look at different sources and understand their positions a little bit better. So the home builders, especially for new home sales, they fall to the lowest pace in more than 6 years. And that's also a very telling sign because the risk is there. So if you're selling a spec home without any buyers yet, or a home that's not built yet, right? That risk is much greater than a house that's already existing. And that's just the fact. And we're seeing that, the single family homes as of July fell by 12.6%. And that is a huge deal. Right? So home builders are actually, they have a lot of risk on their side as well. For example, the costs for labor as well as for materials are also increasing because of this crazy inflation. So it's a very tough spot for them as well. So I do think that the new home sales are dropping. It's a sign that the economy is cooling down a little bit because the housing market is a very important sector for the economy to grow. It generates a lot of jobs in construction, in design. It's just a lot of things going on. So this is also one of the very important news that you should also pay attention to. All right, so now let's get to the data. So these two maps are having the exact same color legend, and this is the housing price. And the lower end is around 200K or less, and it's marked by color in purple in this map. And then the higher end of the price tier is around 500K and is marked by yellow. So back in February, you can actually see that a lot of these more inland areas are in the purple tone. And then some of these like coastal areas are already in the yellow tones, right? So when we're looking at the July map, you can see a very, very clear difference. So there's a lot more yellow tones and then a lot less the purple tone. For example, in the Tampa area, it's also getting to the 400K and 500K tiers, and then around the Orlando area, it's also getting a lot more yellower than purplish, right, compared to the February map. So we can clearly see that the housing price is increasing quite a bit on a year-over-year basis. So for the next set of maps, let's look at the year-over-year change in price. So this is a growth rate. And if it's marked by darker red, it means that the year-over-year change in price is growing by more than 50%. And that's a very, very fast growth. And then if it's lighter in red and also in white tone, it means that it's either not growing as fast or it's actually a negative growth. So that means it's crashing. So when we're looking back in February, you can see that some of these areas, for example, in the 3 counties in South Florida and also some parts of Orlando and also in some of these coastal areas along Tampa, St. Pete, some of these areas are still in the light red tone. And then they're like some of these areas are not as red, right? As, for example, in the southwestern part. And then if we're looking at the July map, it's quite a big difference from the March map, right? You're seeing a lot more of these areas are in the medium red tone, I would say. For example, they're growing to around 30% or something like that. So that means that even though the mortgage rate is increasing, we're still seeing a lot of these areas that the housing price growth is not slowing down. I would say that it's reaching a very close to a peak point because there's only a certain amount of space for the housing market to grow. And if we're deeper into a more contractionary economic environment, you're going to see a lot more of these areas are, having a correction or trending down. But we have to look a little bit more deeper into these markets. So a key factor in determining whether these areas, whether one area or another is peaking or not, has to do with affordability. And it has to do with the salary growth, the wage growth, just in general, the entire household purchasing power. Is it catching up to the housing price in that particular market? It's a very reliable element that you can use to see whether the housing market is growing sustainably or it's going to have a correction. So in the next part, we're going into detail and looking at the July map for the year-over-year change in price. And as you can see, the majority of the Florida cities are still growing like crazy, and some of them might already reached a peak. But for this part, we're typically looking at the cities that are having a correction or crash already. So the way to define a housing crash, it's the difference depending on the market, but I would say that anything above 20% or 20 to 50% at this current moment, I think that it would not fit into the crash definition. But if it's below 20%, I will probably say it's more like a correction, right? So you can clearly see that a lot of the cities are actually focused on, the western coast part of the state, and this part is very focused on the Levy County. So let's just take a look at some of these areas where it's having a white tone, right? For example, in Andrews, you're seeing that the median housing price for last year is around $277K, but in this year, in last month, it's down to $233K. And so that's a 16% housing correction. And because the housing value is dropping, so this is a very telling sign that, some of the housing markets are not holding up in value, and it's leading towards a buyer's market already. And for example, in Chiefland, it's also correcting by 13%. And we're also seeing in Bronson, it's correcting by 16%. So these are leaning more towards, the 20%. So if it goes a little bit deeper in the decrease of the housing price year-over-year change, then it becomes a housing crash, right? So in Williamston, it's also correcting by 16%. And then one of the interesting things that I find when observing and analyzing this type of maps is that a lot of coastal areas generally are increasing in value, especially after the pandemic, right? But there are also a few exceptions. You're also seeing that, some of these coastal or waterfront areas that are also having a housing correction. For example, in Cedar Key, it used to be around 400K, but then a year later, in last month, it dropped to 335K, and that's an 18% housing correction, and that's very, very close to a housing crash right now. So the buyers are just very aware of the situation. And if you're buying into this market, for a self-living homeowner, right, as your primary residence, it might be a little bit more affordable. But if you're an investor, you're literally losing money in equity if you buy into this market. That's just like pure data in front of you guys. You can see it, right? And then another coastal area called Yankeetown. Sometimes I find that these names are very interesting, right? So this area, it used to be close to 300K, and a year later, it becomes 267K. So that's an 11% correction. And for these areas, I do see that their value are going to drop more because the mortgage rate will continue to go up as the Fed funds rate increase in the next year or so, because I do see that the Fed is being very hawkish right now because inflation is a very, very risk and threat to our economic stability at this point. So when we go a little bit down south, we're also seeing some of these areas are having a white tone to it. For example, in Lakuchi, I sometimes find that these names are really interesting. I just pronounce it as it is. So this area is just south of Ridge Manor, and it's also correcting by 4%. And you're seeing Dade City, it's at 16%, even though it's not in a red tone. And then in Crystal Springs, it's also 11%. That's very close, just a little bit above the current CPI, right? But as the mortgage rate continues to go a little bit higher, I think that these areas are also, their growth rate are going to slow down quite a bit, and also turning into the negative growth. So that means their prices are correcting as well. All right. So those are basically the areas that are literally having a housing correction and leading towards a housing crash of more than 20%. So you should pay very close attention to these movements in the market. All right. So for the next part, we're going to take a look at some of these areas that are peaking. I would definitely say that there is a peaking component there, because when you're looking at the housing price and also looking at the median household income, when it's not matching, there's a greater chance that the housing growth will peak, and also leading to a correction and crash position in the next few years. All right. So, for example, we're seeing that Vero Beach is one of the areas along the coast that's growing very fast, and the Indian River Shores is one of the areas with 53% year-over-year change in the pricing. So that's like really, really crazy, right? So I would definitely say that anything above 50% increase is peaking already, because the current market situation is just not really favoring sellers anymore. They would have to cutting a little bit more deeper in the price cut or offering concessions to buyers. All right. So another area that's also growing quite a bit is the Northport, Sarasota, and Bradenton area, which is south of Tampa. All right. For example, you're seeing Sarasota is growing by 41%. Longboat Key is 47%. So these areas, they will continue to grow into the 50% range. But once they get there, their growth rate is going to slow down quite a bit, because into the end of this year and into the mid range of next year, the interest rate environment is going to contract further. All right. And we're going to see a very different picture from this map. So another area that's having more than 50% year-over-year growth is on the beach area in Northport, Sarasota, and Bradenton. For example, in Holmes Beach, last year it was just under $1 million, and then this year it became $1.4 million. So that's like a 53% year-over-year change. And then in this tiny little tip over here, which is also a very desired waterfront area, one of the many areas that's having a major value increase in Florida is Anna Maria. Just imagine, this is also a 53% increase, but back in last year, it was only worth $1.5 million. And then this year, it's worth $2.3 million. So that's a huge increase for your equity, right? So if you invested in this area, you're making a lot of money. I mean, that is a good thing. So this type of maps are very important for you as an investor. It can tell you, what is the return on my equity or investment in total? How much money have I made? And what is the value fluctuation for my property, right? So when you're going into the map and then hover over these tiles, you can actually see that value fluctuation. All right. So let's zoom out a little bit more. And then you can see that, in Punta Gorda and also Fort Myers and the Naples area, it's still in the red tone. And the growth rate hasn't changed much from February. It's still very hot, right? For example, in Cape Coral, we saw that in February, it was already in the 40% year-over-year change, year-over-year growth range. And right now, it's still growing at this rate. So it tells you that a lot more people are moving into these areas because the price point, compared to maybe Tampa or Miami or West Palm Beach or Boca Raton, it's still a little bit more favorable. That's why its growth rate, it's more aggressive compared to the other areas, right? And Naples is right at 50% increase, right? So we're going to observe a little bit better, a little bit more into the end of the year, whether those areas are peaking or they're still having a little bit more space for growth. But remember this, the housing price cannot infinitively grow. That just doesn't make any sense when you compare to the income, the average household income and the median household income. So whether those areas have space for growth, it really depends on the affordability issue, right? So whether those areas have still have space for growth, it really depends on affordability, right? We're also seeing in Boca Raton is one of the South Florida areas on the East Coast that's increasing quite a bit as well, and it's close to 40% year-over-year growth. Right. So when you're looking at, this area in general, you're seeing that a lot of these areas are in the median or the pink tone instead of the red tone. So that means they're still increasing, but I would say that because the price point is getting higher and higher, so their growth will slow down quite a bit. All right. So now let's move to the Central Florida area to take a look at the situation here. So one of the things that I would like to do is to compare, the Orlando area and also the Tampa area. So if you're looking at the price point, let me just put this up a little bit. All right. So in Tampa, the price point right now is at $420K, right? And then if you're looking at Orlando is at $387K. So Orlando is a little bit lower than Tampa. So that means its growth still has a little bit more space than Tampa. And that's a very interesting observation. Even though their year-over-year change in price is approximately a little bit more than 30%, right? So you're also seeing that, these surrounding areas, their growth is also picking up a little bit more. That's because of the spillover effect, right? People kind of have to keep migrating and relocating to areas where their annual income are a little bit more affordable, right? If it goes out of their budget, they just can't buy it, and that's just a fact. Right. And when we're going down a little bit to the Kissimmee area, I'm just going to stick with this pronunciation because it does have a very interesting tone to it. And guess what? I'm going to make it into a t-shirt or mug. All right. So if I see like any kind of names that has a very interesting pronunciation, let's just go with that. All right. So another area that's Point Siena, it's growing a little bit faster than Orlando, and that is because the current price is at $326K, so it's lower than Orlando, right? And you're seeing that the year-over-year growth is at 39%, which is close to 40%. All right, so that's very interesting and telling sign that some of these housing markets they're moving very, very differently according to their neighboring markets. So you have to understand where people are moving, whether they're locating to areas that are lower in the entry price point. What is the current price that allows them to move there? I think that's one of the regional and micro market that's also very valuable. All right, so let's go up to Daytona Beach, this is also one of the areas that's growing quite a bit. And to be honest, the price point, the median housing price point is not that high, right? You're looking at $268K. So compared to the other metro areas in Florida, that's very, very affordable. So I would not generalize all the housing markets in Florida, and I would also not do that for every other state as well. It's very worth looking into each of these markets. All right. So one of the other markets that is growing quite a bit is Palm Coast. So I think that it's worth looking into a little bit more to see, if it's growing a little bit more, still growing a little bit more at this point, then it means that this area or this city has potential, right? And then when we're looking at the Jacksonville area, this is also one of the rising metropolitan areas that a lot more people are interested. And then you're seeing that the majority of these areas is still priced a little bit over $300K and steadily growing at 29%. All right. And some of these neighboring areas, which is along the coast, its price point is a little bit higher, but you can still see that it's close to 30%. All right. So because Jacksonville is located near the border of Florida and Georgia. So it is a very pivotal location that's going to bring in a lot of infrastructure projects that's going to be supported by the government. And also its transportation is very convenient. And I think that it's a very important component for a city to grow, especially in value in the long run. All right, so now let's go back to the housing price map for a little bit. You can actually see from this map, you can see the current housing price in your city or the city of your interest, whether you want to sell, whether you want to buy, you want to wait for a little bit. You can see through this map, like just by the color visualization, you can see whether it's in a good position or it's something that you're very concerning, right? And the other thing that I improved a little bit for this map is that you can see the metro area names. So even if you're not familiar with this area, you know where it's located. All right. And then I also include a filter on the right side of this map. So you can use this to locate your specific area. So the way to do it is that you click on it first and then uncheck all. And this is very important because you only want to see the area that you're interested in. For example, if I want to see Boca Raton, right? So I can just type in, right? So you don't even have to type in the whole thing. It just pops up automatically, right? And then you can see where Boca Raton is, and you zoom in a little bit, you can see the price for last year, for this year, and also the year-over-year change. So this is very helpful for you, whatever you want to do. Right. So as usual, I'm going to provide these two maps on my Wix site and also on my Tableau profile. So definitely go in and check out for yourself to understand your local housing market for a little bit more. All right. So thank you so much for watching and your dedicated support for my channel. I really couldn't have done it without you. All right, so in the next video, I'm going to update a little bit more information, and I will tell you what it is on my community tab ahead of time. All right, so thank you so much for watching, and I'll see you on the next one.